Imagine sitting in your doctor's office, waiting for the results of a routine blood test.
Right. Something we all do.
Yeah. Your doctor walks in, looks at your chart, frowns, and then out of nowhere asks to see your latest mortgage statement.
It sounds completely absurd.
It sounds entirely absurd. But, as we look at the data today, medical science is proving that the balance in your bank account and the volatility of the housing market is actually altering your cells just as aggressively as the food on your plate.
It is a complete paradigm shift. I mean, we have spent decades treating our physical health and our financial wealth as two completely separate universes.
For sure.
You have your gym membership over here and your investment portfolio over there, but that diagnostic wall between our wallets and our cells is it's crumbling.
Well, welcome to today's deep dive. It is Sunday, April 12, 2026, and I'm so glad you're joining us for this. Okay, let's unpack this.
Let's do it.
Our mission today is to explore this startling, almost invisible connection. We're going to look really closely at today's chaotic macroeconomy.
Specifically the housing and mortgage markets, right?
Exactly. And we're going to map exactly how that daily volatility connects directly to your actual cellular biological age.
And we have a really fascinating stack of sources to guide us through this today. We are looking at the latest daily market trend reports, which are pulling fresh data directly from Freddie Mac, Zillow, and the Federal Reserve.
The big hitters.
Right. And then we are cross-referencing those economic indicators with the April 2026 daily briefings on longevity medicine and healthspan.
Which is such a wild crossover.
It really is. And to tie all of this together, we're examining a highly specific book by Kim and Ray Gedstad regarding reverse mortgages.
It is just a wild mix of reading material today. I mean, bouncing from interest rates to cellular inflammation.
It's a broad spectrum, yeah. But setting the stage for today, I want you to keep this one overarching concept in mind. Today isn't just about reading numbers on a spreadsheet. It is about understanding how your wallet directly regulates your nervous system and why redefining your financial strategies might actually be the ultimate health intervention.
So we know the spring 2026 housing gridlock is real. We feel it. But how tight is the squeeze exactly? Like, what are the mortgage intelligence numbers actually showing us today?
The squeeze is incredibly tight right now.
Yeah.
If you are looking at a standard 30-year fixed mortgage through Freddie Mac, you're looking at an average rate of 6.37%.
Which is high.
Yeah, that is technically down a tiny bit from 6.46% last week, but still heavily elevated. Meanwhile, if you look at the Zillow lender marketplace, they are showing an average of 6.15%.
Still well above that psychological 6% barrier that everyone freaks out about. What about the other loan product?
Well, the 15-year fixed is sitting at 5.64%, and the 30-year refinance rate sits at 6.78%. But the number that really dictates all of this, like the actual pulse of the entire mortgage market, is the 10-year Treasury yield. Right now, it is hovering at 4.317%.
Okay, let's pause on that 10-year Treasury yields for a second.
Sure.
For you listening, if you're wondering why a government bond matters to your house hunt, it's because mortgage lenders use that 10-year government bond as their absolute baseline.
Exactly.
If the United States government has to pay a 4.3% yield to borrow money from investors, your local bank is absolutely going to make you, a normal consumer, pay significantly more than that to borrow money for a house. The Treasury yield sets the floor.
What's fascinating here is that these numbers don't exist in a vacuum. There are four massive macro forces currently shaping this reality and keeping that floor so high.
Okay, what's the first one?
First, we have geopolitical conflict. Oil has spiked over 40% since March alone.
And when energy costs spike, the cost to manufacture and transport literally every single good in the economy goes up. It just feeds right back into the inflation loop.
Precisely. Which brings us to the second force, which is tariff chaos.
Oh.
Yeah. Tariffs on imported lumber, steel, and appliances are drastically pushing building material prices up. According to the National Association of Home Builders, that price growth is remaining above 3%.
So building a house is just getting more expensive.
Right. When builders have to pay a premium for imported steel and lumber, they pass those costs directly to the buyer, which drastically constrains the affordable new housing supply.
Which means we are all relying on existing homes, right? Which leads us to your third force.
The collapsed refinancing market.
Let's talk about that.
There was a really brief window in February of this year when rates hit a low of 6.09%. But that window just slammed shut.
It was so fast.
It was. And anyone who bought or refinanced a home in 2020 or 2021 at those historic sub 3% lows, They're completely locked out of moving. I mean, they cannot afford to trade their 3% mortgage for a 6.37% mortgage.
Obviously not.
So nobody is selling.
They're just trapped in their current homes, which chokes the inventory even further.
Yep. And the fourth and final force is Federal Reserve uncertainty. The Fed tracks inflation using a metric called core PCE, personal consumption expenditures.
Right, which strips out the volatile stuff.
Exactly. It strips out food and energy to give the Fed the truest signal of underlying persistent inflation. Right now, core PCE is stuck at 2.7%. That is stubbornly above the Fed's target of 2%.
So the Fed's hands are totally tied. They can't lower borrowing costs until that core PCE number comes down to 2%.
Which is why the Fed held its benchmark rate steady at 3.5% to 3.75% at their March meeting. The broader market had really hoped for aggressive rate cuts entering 2026, but the Fed is trapped in this very cautious wait-and-see mode.
And looking at the forecasts from the major institutions in our sources, the predictions are honestly all over the map.
They really are.
Like Fannie Mae expects rates to drop to just under 6% by year end, but the Mortgage Bankers Association predicts they'll just hover near 6.3% through the rest of 2026.
It's totally split.
Yeah. S&P Global predicts robust mortgage issuance growth despite stagnant prices, while Zillow has completely cut its housing outlook due to all this uncertainty. And then JP Morgan is just foreseeing continued affordability challenges across the board.
It is a deeply fragmented consensus. Nobody knows exactly which way the wind is going to blow right now.
You know, trying to buy a home right now feels like driving on a highway where the speed limit, the price of gas, and the toll booth fees are all changing every 5 miles. You literally cannot plan a trip.
That is a perfect analogy.
But there's one silver lining in the sources today. Home prices actually posted a 0.2% year-over-year decline in February.
Oh, wow.
Yeah, that is the first annual decline we've seen since 2012. And Redfin reports that touring activity is up 23% since the start of the year. So buyers who do qualify today, despite the high rates, actually have slightly more negotiating leverage with sellers than they've had in the last 4 years.
That is a crucial point for anyone actively in the market. If you can stomach the volatility, there are small pockets of opportunity out there. But that phrase, stomaching the volatility, is exactly what brings us to the second part of our deep dive.
The biological toll. Because if we link this constant economic whiplash to the human body, the picture gets really intense.
It gets scary.
Yeah. We are looking at tight household budgets, massive affordability fatigue, and these stubbornly high rates. What actually happens to our biology when we live in a state of perpetual financial gridlock?
Well, to understand the biological mechanism, we have to look at the biggest wellness shift of 2026. The medical community has officially moved away from the concept of anti-aging.
Oh, so anti-aging is out.
Trying to just stop the clock is completely out. The entire focus now is on healthspan, which means maximizing the number of years you live in good health, completely free from chronic disease.
Quality of life, rather than just the raw quantity of years survived.
Exactly. And researchers in our daily briefings outline 4 foundational pillars of this healthspan movement. They are strength and mobility, cognitive clarity, emotional resilience, and independence.
Okay, got it.
If you lose one of those, the others quickly follow.
Here's where it gets really interesting. In looking at those 4 pillars, the emerging cornerstone of longevity medicine in 2026 isn't a new supplement or some surgical procedure. It is nervous system regulation.
Yes.
The health of your nervous system dictates how well your body maintains those 4 pillars.
Because the nervous system is the central control center for inflammation, hormone production, and cellular repair.
Okay, wait, I have to stop you there, or at least clarify this for you listening. I understand that stress is generally bad for us, obviously.
Right.
But are we actually saying that agonizing over a 6.78% refinance rate or, opening a staggering grocery bill because of that 40% oil spike is interpreted by the human body as an actual physical disease? That sounds like a massive stretch.
It does sound like a stretch until you look at how the human brain is wired. Your nervous system evolved over hundreds of thousands of years to protect you from immediate, life-threatening physical dangers.
Like a predator in the wild.
Exactly. Like a tiger. Your brain does not know what a 6.78% mortgage rate is. It only knows fear.
Oh, wow.
So when you panic about housing affordability or inflation, your amygdala, the fear center of your brain, trips the exact same alarm system as it would if you were literally being chased.
It initiates the fight or flight response.
Yes, it floods your body with a hormone called cortisol.
Right.
Now, in short bursts, cortisol is great. It gives you the energy to run away.
Right.
But chronic financial stress means that alarm is ringing 24 hours a day. Over time, that chronic cortisol elevation actually shrinks the hippocampus, impairing your memory.
which directly attacks that cognitive clarity pillar.
Exactly. And more dangerously, it drastically increases systemic inflammation throughout your entire body.
Which medical science universally points to as the root cause of almost every chronic disease, from heart disease to autoimmune disorders.
Your bank statement is essentially triggering a localized inflammatory response in your own cells. Financial stress accelerates biological aging by constantly degrading your tissue.
That is terrifying.
It is. But the longevity sources point out something incredibly powerful as a countermeasure to this: social connection.
Really, just hanging out with people.
Yeah, it is now recognized as a health intervention on par with prescription medication.
Because having strong community ties signals to your nervous system that you are safe, which lowers the cortisol.
Exactly that mechanism. Community reduces that systemic inflammation. Isolation, combined with financial stress, is a biological disaster.
So if you are financially stressed, withdrawing from your social circle is basically the worst thing you can do. Community is literal medicine. Which brings us to a fascinating question. If financial insecurity accelerates aging, especially for seniors who are on fixed incomes, facing these falling home prices and elevated rates, what are the immediate actionable interventions to protect that fourth pillar of health span, their independence?
This is where we examine the highly specific arguments laid out in the book by Kim and Ray Getstard.
Right, the book titled One Reason to Not Get a Reverse Mortgage. I have to say, the irony of this title is incredible.
It's very catchy.
You pick it up assuming it's a warning manual. But while it does identify one specific cautionary scenario, mostly dealing with leaving the home early, the book overwhelmingly champions reverse mortgages.
And our goal here is to impartially report what the Gedstads are arguing because it is a bold thesis that perfectly illustrates this new intersection of wealth and health. We are not endorsing it, just laying out their case.
Right, exactly. We're just looking at the source material.
So their core argument is that reverse mortgages allow seniors to access the equity they've built in their homes without taking on any new monthly mortgage payments.
You tap into the cash, but you aren't writing a check to the bank every 30 days.
Correct. By doing that, the Gedstads argue, you eliminate a massive source of daily financial friction. You are no longer worrying about covering the bills with a fixed retirement income, while inflation just eats away at your purchasing power.
And according to the health span data we just discussed, eliminating that chronic stress shuts off the cortisol alarm.
That is the crucial link right there. The Gedstads argue that by neutralizing that specific financial pressure, the reverse mortgage directly protects the gut, the brain, and the heart from cortisol-induced inflammation.
That is a huge claim.
It is. Since financial insecurity accelerates aging and causes disease, they position a reverse mortgage as a tool to stop that accelerated aging in its tracks.
So what does this all mean? I really have to push back thoughtfully here. Framing a financial loan product, which, let's be real, has fees, compounding interest in complex terms, as a heroic, life-saving medical solution is a pretty radical leap.
It is a leap, yeah.
Are we blurring the lines between wealth management and healthcare a little too much here? It feels like we are applying a medical bandage to a math problem.
If we connect this to the bigger picture, it certainly sounds radical at first glance. But the underlying logic they are using aligns perfectly with the 2026 healthspan data.
How so?
Think of it this way. They're looking at financial stress the same way a doctor looks at a leaky pipe in your house that is causing toxic mold. The medical system typically just treats the mold, the symptoms of the stress.
Right, with pills or whatever.
Exactly. The Gedstads are arguing that a reverse mortgage isn't just treating the mold, it's turning off the water at the source.
By removing the monthly payment, you remove the leak.
Right. If we accept the medical consensus that financial pressure causes systemic inflammation, then removing that pressure is inherently a biological intervention.
Okay, I see the logic.
They are simply taking the data to its logical conclusion. And with today's falling home prices, they argue this tool is more relevant than ever for maintaining a senior's ability to age in place, thereby preserving the independence pillar of their health span.
Okay, that covers seniors who own homes and have that equity to tap into, but that raises a massive question for the rest of us.
For sure.
Let's pivot to the broader listener base. If you're 40 years old and you don't have decades of home equity, how do you biologically protect yourself from this exact same economic volatility? How do you control what you can?
You have to utilize a combination of market awareness and biological levers.
Let's start with the market awareness. There is some actionable financial data to watch that can help reduce the anxiety of the unknown.
Yes, looking at the data is key.
According to the CME FedWatch tool, which tracks the probabilities of Federal Reserve actions, the most probable next move is a 0.25% Fed rate cut coming up in June 2026. And the market reports note that if the Fed eventually lowers their benchmark rate to just below 3%, 8 ELOC rates, that's a home equity line of credit, could drop a full percentage point later this year.
And the mechanical advantage of a ELOC is that those Federal Reserve rate cuts pass directly to borrowers within 30 to 60 days. There is no refinancing action required, no massive closing costs to pay again.
That's amazing.
It adjusts automatically. So if you are currently utilizing an ELOC to manage expenses, relief could happen without you lifting a finger.
To anticipate that relief, you don't have to just sit in the dark and wait.
No, you can actively monitor the metrics that the Fed monitors. Keep an eye on upcoming weekly jobless claims, CPI data, new home sales, and existing home inventory reports.
Just watch the dashboard.
Exactly. Those are the specific data points that will dictate the Fed's communications ahead of that June meeting. Watching those numbers gives you foresight, and foresight naturally lowers the amygdala's fear response.
By watching the data, you remove the unknown. But what about the physical side? Our 2026 longevity briefings highlight some very specific daily wellness habits to combat this macroeconomic stress.
Things like breath work and somatic practices,
Yeah.
right?
Yes, exactly. The goal is to manually and actively regulate the nervous system back to a baseline of safety. And interestingly, they recommend actively simplifying major financial decisions as a core health strategy.
That makes so much sense.
If managing a complex stock portfolio or hunting for a real estate deal is jacking up your cortisol right now, stepping back is a medical intervention.
It's all about reducing cognitive load. You only have so much bandwidth before the system starts fraying. And that concept of protection extends directly to how we fuel our bodies.
Let's talk about food.
Yeah. The defining food trend of 2026, according to our sources, is personalized nutrition. We have completely moved past generic, one-size-fits-all diets.
Thank goodness.
Nutrition is now precisely tailored to an individual's gut microbiome, their specific metabolic patterns, and their natural hormonal cycles.
Precision fueling, based on your own cellular blueprint.
The key insights from the data emphasize circadian eating, which means aligning your meals with your natural body clock to optimize digestion, along with prioritizing stable blood sugar meals, fermented foods, and anti-inflammatory herbs.
And here is the aha moment for you listening. When the Fed decides to hold rates steady and your financial anxiety spikes, eating a bowl of fermented foods or taking anti-inflammatory herbs isn't just a trendy diet choice.
Oh, not at all.
You are actively introducing beneficial bacteria to your gut to suppress the systemic inflammation that the Federal Reserve's policies just triggered in your body.
Wow.
You are literally using your kitchen to fight back against macroeconomic policy.
That is the exact mechanism at play. You are treating the biological fallout of the economy. Furthermore, if we look specifically at aging adults navigating this economy, the longevity sources are very clear.
What do they recommend?
The absolute most evidence-backed interventions to preserve muscle mass and cognitive function are adequate protein intake and resistance training.
So lift heavy things and eat enough protein to keep your physical body strong enough to weather the 6.37% mortgage rates.
It sounds reductive, I know, but that is the 2026 survival guide in a nutshell. Build physical resilience to absorb financial volatility.
It really brings everything we've talked about today full circle. I mean, we started off looking at a thoroughly gridlocked housing market, a spring season defined by elevated 6% plus mortgage rates, tariff-driven construction costs, and a completely paralyzed refinancing market.
The macro picture.
Yeah. But then we looked under the hood and saw how that isn't just a number on a screen, it's a physical weight. We explored the literal biological damage of chronic financial stress and how the fight-or-flight response accelerates our cellular aging.
Right.
And finally, we looked at the radical idea of fighting back. Whether that's seniors utilizing a reverse mortgage to turn off the stress at the source and reclaim their independence, or anyone using personalized nutrition, breathwork, and market awareness to protect their health span.
And for you listening, the core takeaway from this massive stack of sources is that whether you are watching the 10-year treasury yield tick up and down, or you're just managing your daily protein intake, your wealth and your health are inextricably linked at a cellular level.
They really are.
You can no longer separate your financial strategy from your biological reality.
They're completely intertwined. Which leaves us with a really fascinating lingering thought based on everything we've unpacked today.
Let's hear it.
If chronic financial stress acts exactly like a biological disease, actively accelerating our cellular aging,
Yeah.
and our modern economy is built on a foundation of constant market volatility, tariff chaos, and housing pressures, are we inadvertently building an economic ecosystem that is fundamentally incompatible with our own biological survival?
That is a profound and honestly slightly terrifying question, but it's one we all need to be asking as we navigate this market landscape.
We'll leave you to mull that one over on your own. Thank you so much for joining us for this deep dive. Keep questioning the numbers, keep protecting your peace, and stay curious, because it turns out the health of your portfolio and the health of your cells might just be telling the exact same story. Catch you next time.